Thank you all for joining us on this bi-weekly broadcast. We get to talk to many of you in between, but for many of you, this is just a great check-in point, and many of you know that it's there and you can use them whenever you would like. We'd like to welcome you this week as the COVID time frame is kind of stretching on. One thing I saw from Dr. Amen this morning is don't hide or don't bottle up your anger because it will come out in crazy different ways. I thought that was an interesting piece with today's highlights. Some of the news, different items that you'll see, which I don't watch. I just happen to see what the headlines are so I can understand what we're talking about today. One of the things I like to do is to begin in gratitude, which you all know. So all of you have your little Gentain journals. Please take a moment, pull those out. Let's begin in gratitude. Let's not forget that piece, as sometimes we jump right to our news. So just over the last maybe 30 days, what is something that you're grateful for that you've experienced? So I'm going to give you about 60 seconds to go ahead and write that down, and then we'll share ours in about 30 or 40 seconds. All right, so one of the things I'm thankful for is this weekend, we had our dog, Rainer. We get him, we kind of have a share a dog. It's a time, maybe a kind of a, what are those things called? Timeshare dog. We get him about 3 weeks here. We had him this week. He's really becoming an awesome dog. But we had this little Scrabble game on our wall, and it fell down, and he ate all the Scrabble tiles. So all weekend, he was leaving us messages all over the lawn. How about you, Ken?
Yeah, I'm grateful for, we have wonderful clients. I was talking to a client about 3 or 4 months ago, and we were talking about going to Door County. They offered up their condo to us to rent it out for a couple of days. So we just have wonderful clients. We have wonderful people that we are able to connect with on that level as well. Up in Door County, if anybody goes up there frequently, there's a place called the Blue Horse Cafe. One of our clients is daughter actually owns that place. So if you have a chance, stop in, say hi to everybody there. So support local businesses. So just grateful for wonderful clients, all of you watching and that will watch this. You're wonderful people. You're very nice to us. And we truly appreciate the nice relationship we've created over the years.
Awesome. Thanks, Ken. How about yourself, Zach?
Yeah, thanks, Chris. I'm actually grateful for this quarantine journey. Not necessarily grateful for all the hardships that come from it and things that have happened in a negative way for people. But personally, I've turned it into more of a challenge for myself to stay positive, to help as many people as I can, and a newfound love-hate with running. So the most I've ever ran at one time was about 3 miles, starting in March. Ran a marathon on my own about a month later, and then continuing that journey on from here. So up to about 60 miles a week. And it's just been a great personal journey. And so that's kind of the challenge that I've made for myself, is how can I take something that is perceived as very negative and turn it into a positive and grow from it. So I'm very grateful for these last couple of months on that side of things as well.
Awesome. Thank you, Zach. And for many of you, I know you'll share those with us at some time when we get together for a meeting, but I just wanted to go through some of those because it's important for us to really reframe this during this time that many people find trying and maybe call it patience is a big virtue right now. Well, one thing we're going to talk about today also is teachable moments. So there are plenty that are coming out of this. Be careful to capture those. Be careful to go through these because a great crisis shouldn't be wasted. And I mean this in a strong way. Incredible things will come out of this. We want to make sure we capture those. So that's one thing I want to reiterate as well is capture. So housekeeping wise, I want to go through a couple of different things for us today. And Ashley has Gentain Women's Group she wants me to make sure we talk about, and that's a great group we have of women coming together. It's a virtual gathering next week, Wednesday, July 29th at 10 a.m. Please remember to register. So please reach out to that. A lot of people were hesitant at first. Once they've tried it, they have absolutely loved it. It's a nice community that you can get into, and it's always tough. Here's one thing I know about going into a program you haven't been in. You always hesitate, like, I don't know about that. I'm going to make a statement. Try this one because you're going to love it. I've had many people say I was hesitant as well. But once I did, I think it's a nice group of people that you'll find share a lot of similarities with you. So I'd recommend you guys going into that. That would be a wonderful one as well. And any questions, you can email Ashley or any of us here at the firm. Also, the questionnaires are still being distributed for the Get to Know You Better. And the whole goal of this, again, one of my clients said, are you starting a dating service? We're not starting a dating service with this. Literally, for those who'd like to get to know us better and us to get to know you better, it's wonderful. One of my clients yesterday on the phone, I said, I didn't know your favorite color was brown. He happened to retire from UPS, so it makes a ton of sense. I knew his favorite color was brown. His favorite restaurant as well was Perkins, and we happened to meet him at the machine shed. I said, what are we doing? Machine shed's just down the street from Perkins. Why aren't we there? Very funny, but you'll just find some of those different pieces are great for us to know. We really appreciate getting to know you better, and we'll start sending you out our secrets as well to get to know us better as well. Please keep an eye out for the online appointment scheduling. It's been going very well. It gives you convenient times to schedule your own online appointments. And most importantly, too, I want to thank you for your adaptability. You have made this crisis, what people have called a crisis, if you will, this pandemic, very palatable by your adaptability. We'd rather see you in person, but many of you said, hey, we don't mind doing reviews this way, even when it comes time for us to come here. So it's an interesting piece. Many of you have really forged ahead in the technology venture. We still have a few phone conversations, but many of you have forged ahead in the Zoom venture, and we really, really appreciate that piece as well. Our next Wednesday webinar will be August 5th. It's bi-weekly now, remember that piece as well. Unless there's something incredible, we'll bring a 2 weeks from now, unless there's something incredible we'll talk about before that. Also, a quick reminder, all webinars are recorded and they're on our website. I think many of you know that. I've been talking to you and asking many of you about our amount of communication during this. And what happened pre-COVID, we used to have our programs and seminars. Once COVID hit, we actually started ramping up to weekly and probably even almost every other day, some sort of communication. And now we're ramping down as the recoveries occurred as well. What we don't want to do is overemphasize a correction, but what we do want to do is make sure we're there for you during them. So I wanted to make sure a lot of you said, no, we like it. We think it's great. It's just enough. We know it's there if we need it. But many of my clients said, we don't really need it because you've been talking about these for forever. It's an interesting piece. Is including a good one as well. There's a how to Zoom and host family and friends and history gathering. Know your risk, mask protection, the CARES Act, and other value. There's a ton of great resources on the website as well. So you'll see a bunch of those. I'll bring up something as well. One thing I want to talk about is mindsets. What's difficult about this is to really bring everything together into one short, maybe very understandable webcast. But one thing we like to do is we've got a format. We start with opening, kind of everything that goes on, then mindsets, markets. We then go to miscellaneous, or kind of a closing and a piece that comes from there. But what's interesting about this one is mindsets. If you look at today, I think really the teachable moments are important, and really patience is extremely important right now. I think that's a super important piece that we found. I'm going to talk about experts in just a moment here as well. But I did have one thing I like to always throw a little bit of humor in. What did the Buddhists say to the hot dog vendor? Make me one with everything. So at any rate, those are some of the good pieces. Now, one thing I say, don't forget gratitude. We started with that piece as well. But teachable moments, this is one. The time we're in now has really provided many, many of these teachable moments. What I want to make sure that we do is talk about a few of those. So let me ask a question. So we had, up through February, one of the greatest bull markets, was occurring in history. It was fantastic, right? And we had all the beginning of the year, all the experts, we kind of, look at what they do and talk about, they've assembled. Over time, you kind of wonder why I don't follow too many of them. I'm about to ask you a question. So with all the forecasts, all of them were out there. How many predicted what's happening right now? Precisely 0. So let me bring another point up as well. Since none of them predicted this, that's an interesting piece, right? Many of Howard Marks, I think, said most of things in history happen in the 95% of what occurs. The most interesting things happen in the 5% outside of normal. That's what's happening right now. So there's some great statements by great investors. They've been around a long time. But what's really important about this as well is really patience in the unknown. So you guys have been extremely patient. Some of you have really adopted to this and really made this kind of a new normal for you. But what we look at here is in some of these teachable moments, with all the advice of these experts going on out there, Ken and myself and Peter and Zach have been getting all these new mid-year reports, mid-year about what's going to happen. How many of these experts do you think are actually going to be able to predict what's about to happen as well? Anybody? That's right, 0, because there is no future facts. There are no future facts, I should say. So what's interesting about this is people are now beginning to rely on a forecast of people who couldn't predict what happened right now. Even worse, let's start taking this to the next level. They're beginning to talk about friends or friends advisors or some random news person who's saying what's going to happen and wanting to prepare for the next downturn. Peter Lynch said, more money's been lost preparing for downturns than in downturns himself over history. Mark his words. So be really careful right now about all those, quote, do-gooders, because here's what happens in human nature. You have a bias toward taking action, being it wrong or right. And that action is, oh my gosh, we got to take action to what's going on. Here's the one thing I'd say. We work toward a plan. We do not react to what's happening with investments daily. That's not the successful way to operate. I've seen it many times, and over time, we want you to have a very successful life in this unprecedented length of retirement that we're having today. Your parents didn't have it, you're having it longer. So I really want to go. There's a couple points I've mentioned in there, but that's really, really important. Listening to your friend, your neighbor, your brother's advisor. So you have trusted us. Many of you have trusted us for my entire career, which I really appreciate as well. If you go through 25 years with us, that's 3 major corrections. You know what we've done during those times, and you know how it's been successful. This time is no different. For those of you who are newer clients of us, I know it's extremely difficult to trust us during this time as well. When your neighbor and everybody's clamoring, yeah, the next one's going to be horrible, it's going to be down if so-and-so's elected, blah, blah. But I really wanted to give this a teaching moment, if you will, to history to say, this teachable moment is really about patience, discipline, and working a plan that you've got with us already. So why don't we time it? I'll show you in just a moment here, but I wanted to really talk about that just as we go along. Matter of fact, since I'm in this moment right now, I'm going to share my screen with you. I'm going to share a couple pieces, and I want to bring this up in, if hopefully you guys can all see it. Let me know if you can. Good. So this is some of the different pieces we have on the website. It's being informed about COVID risk. Low risk is playing tennis, opening the mail. You know, high risk is going to a bar. So for many of you who are going to bars, you know that's a high risk item at any rate. Some of the different pieces here I wanted to show you, and this is probably the biggest one. Some of you have seen this, if you will, on your review, but I want to go through this super quick. So since I've been born, 1970, there have been 12,500 approximate trading days. That's 12,500 since I've been born approximately, okay? But what's interesting about this says if you invested $1,000 the beginning of 1970, today it's worth about $121,000. It's pretty impressive, right? The key is if you missed the single very best day, 1 out of 12,500, you lost about 10% of your return. The next one would actually show that, so if you missed the best single day of each of the 5 decades, you would lose approximately 40% of your return. That's 5 days. Now, even worse, if you miss the best 15 days of those 12,500, so I'm going to go 15 over 12,500, that's 3 days a decade. If you miss those 3 days, you lost about 65% of your return. So you're going to lose 2/3 of your return, potentially, timing it, over the last 50 years if you missed 3 days a decade. Tell me that makes any sense. So if you don't believe us about the statistical aspect of this, I wanted to show you this, but we often tell you don't try to time it because you'll never know what happens. So at any rate, I just wanted to show that and share that with you. I think it's a great piece. You've seen it before potentially, but I think you can never see too many of the fundamentals, if you will, across the board. So I wanted to share that one with you as well. I'll stop on the sharing right now, and I'll actually probably pass some of this over to Ken for Zach, or so with some of the markets and what's going on with this as well. So Zach, how about the markets?
Yeah, absolutely. Thanks, Chris. We'll start with the market update just from Market Peak. We've had a couple of questions on, since the market reached its previous peak back in February, where are we at today? We had a couple of questions come in recently about stock slices, just on what they are, how they work. And then also kind of just switching gears a little bit from the markets, we'll just briefly touch on refinancing, a couple things to consider and talk about. We've received a lot of questions on, does this actually make sense for me to refinance? So we'll talk through a couple pieces and points to think of when it comes to refinancing as well. But as far as the market update, from market peak, the Dow Jones reached its market peak on February 12th. Of 2020, and from that market peak, it's down about 9.7% still. The S&P 500 reached its market peak on February 19th, and it's down about 4% from market peak. And the NASDAQ reached its market peak on February 19th as well, and it's actually 9.7% positive since that time point. So it's very interesting to look at just to see how fast the market has come back. Now quickly it dropped at the same time as well. The second point that we talked about, stock slices. Instead of buying one whole share of stocks like you normally do and have in the past, there are things now out there where you can buy just a piece of that stock if you can't buy, for investors that don't have the money to buy one whole share. As an example, Amazon's trading at about $3,000 a share right now. But if someone only had $100 to invest, but really, really wanted a portion of Amazon stock, they could put that $100 and grab a stock slice, if you will, which would own about 3.2% roughly of Amazon share. So stock slice is becoming more and more common for people that want to buy individual stocks that may or may not have the money to buy one whole share or two whole shares. It's something that's becoming more common and we're seeing more of.
Hey, Zach, on top of that, so we were talking about this before, and Chris and I have been in the business for a little while now, and there used to be things called dividend reinvestment plans, DRIP plans, where you could take $15 and buy shares of the company stock that you were either working for or outside as well, where you could buy 0.25 shares or a half a share or something like that. So this is kind of like the new dividend reinvestment plan.
Absolutely. Great point, Ken. And if we're switching gears just a little bit and talking about refinancing, the question that we receive quite often recently over these past few months as rates have dropped is, does it make sense for me to refinance? As most of you guys have seen over the last week, the 30-year fixed rate mortgage fell below 3% for the first time, and 15-year mortgage dropped to about 2.48% last week as well. A general rule of thumb that we've heard from people in the mortgage and refinancing industry was that it may be worth to refinance if the rate you can refinance to is anywhere from 0.5% to 1 full percentage point lower. But there's more things to consider than just the rate, they told us, and that is closing costs, the loan term, and also another one is how long you plan to stay in your home. And due to the high demand, the rates can take weeks or longer to close. The refinancing can take weeks or longer to close. So it's because of the high demand, it's taken a lot longer to refinance those. Another main question to consider if you're thinking about this is, what is my break-even point, or when will I recover the cost of refinancing? Or in other words, the point at which your savings in monthly payments from refinancing and interest overcomes the added cost of doing so. And if you guys really love doing math by hand, it would be your total costs, including the closing costs, title, appraisal, and other fees, divided by your monthly savings. Or you can just go to Google, type in refinance calculator, and type in your inputs there as well. But the one quick example that a mortgage expert gave us was, if you've lived in your home for 5 to 10 years and plan to stay in your home for many more, refinancing to a 30-year loan may not make sense because you'd be paying interest a lot longer again. So again, just a few questions that we've been receiving and a few points to think about when it comes to refinancing.
Thank you, Zach. Well, I know some of these statistics make people feel a little bit nervous. I've got a question for you. What sits at the bottom of the sea and twitches? A nervous wreck. So what this does, this kind of makes people feel that way from time to time. So I appreciate that as well. I mean, the big question I have is, will the market, and this happens a lot, will the market go down? You know what my answer is? Yes. We just don't know when. So it's kind of an interesting piece here. People are going to say, well, it's the next election, it's the COVID, it's the this, it's that. Pfizer today got $1.9 billion for 100 million doses for the United States sometime in, I think it's September, October of this year, for a potential vaccine they have coming out as well. So that's the third company now that's been credited the government to actually buying the vaccine. So there's plenty of doses out there, plenty of people working on it. Just an interesting piece is that as well. Thanks on that for the markets. We've also seen this refinance craze now drop where 30-year mortgages are below 3%. There's precedent. This is historically unprecedented. Now, two other historical unprecedented timeframes are the drop in the market during February and the best recovery in history. So going through two of those, it's like a 50-day recovery, a 30-day drop. It's absolutely amazing to see as well. So kind of maybe that should be our statement. This should be called unprecedented, should be this webcast. At any rate, Ken, how about some of the planning ideas that you have to go through?
Yeah, thank you, Chris. Thank you, everybody. It's nice to see everybody. I can't see you, but it's nice that you're with us right now. But a couple things. I want to talk about distributions from your portfolio. I want to talk about estate planning and giving, and also talk about some scenario planning I've heard over the last couple of months of talking to you all. So those are the three things I want to talk about. Before I jump into that, remember, there's a relief on any unwanted required minimum distributions that we took out for 2020. So going back to January 1 of this year, we have until August 31st, so about a month away. We have until August 31st of this year to get those unwanted RMDs, required minimum distributions, back into our IRA if that's what we so choose to do. So just wanted to throw it out there. We mentioned that 3 or 4 times. You've gotten a phone call from us. If you have taken one that you were maybe questioning whether you should have or not, you probably heard from us on that already. But if you haven't, here's another reminder as well. There'll probably be one more on August 5th when we do that webinar as well. So distributions from your portfolio, those of you that have been retired with us for a while probably understand this process a little more. Those who are getting ready to retire with us and those who are really close to that period of time, this can be a kind of a confusing thing because you're leaving a great paying job. You have a 401k or a 403b or some sort of retirement plan. Many of you, what you do is you roll those over to us so we can manage that for your entire retirement into your IRA. But then how do we start? How do you get a paycheck? Basically, how do you get monthly distributions from your accounts here? So in our world, very simple, but from your standpoint, how do we do that? Maybe a little confusing, right? So what we do is we actually set up what we call a direct deposit. So from your IRA or personal account, we'll work with your tax accountant to find out what the optimal way to distribute money to you is. So sometimes we take from Roth IRAs, sometimes we take from IRAs, sometimes we take from personal accounts, maybe all 3 in combination, just to reduce your overall taxable income. So we'll work with you on that. We understand that piece very well. But what we do is we set up a direct deposit to your bank account of your choice. And you can choose whether we take these out monthly. It's our preference, and the evidence also shows that if we take out monthly distributions rather than quarterly or semi-annual or one-time bigger chunks of money, the evidence shows that if we can smooth that out over a monthly period, that we actually have better results with your money. So monthly is preferable. We know that sometimes you have that unexpected thing that does pop up where you do need $5, $10, $15, $20,000. We understand that piece. We've designed your portfolio on purpose. We have specific investments to handle those types of requests. We have different buckets in your money to handle those types of requests as well. So we have that set up for you. We're doing that behind the scenes for you in the portfolio design for your particular situation. So what we do is you can pick and choose. You can pick whether you want it on the first of the month or the last day of the month or anywhere in between. You can start this, you can stop this, you can increase your distribution. Say you're doing $1,000 a month and you need a little more, maybe we can do $1,200 a month if it fits within that 4% withdrawal rule that we talk about as well. You can stop them. It's like a spigot. We also can withhold taxes. This is a big one for you. It's very easy for us to withhold taxes for you. It's one change, it's one form, it's very quick. It's something we can do for you. And many of you do that over the course of the years as well as changing things. Sometimes it's not that easy to change tax withholdings from pensions and Social Security. It's a little more of an arduous process that you have to go through to change those things. So if we need to withhold a little more from your IRA distributions here, let us know. Something we can easily do for you and work with your tax accountant as well. So just so you know that when you do retire, it's a very simple thing to set up. So don't worry about that. We can actually get you your monthly income that you need and that we've talked about during the planning process of retirement with you. We can certainly do that for you as well. Estate planning and giving, just want to touch on a couple pieces here. A lot of questions in the last couple months as well. There's many ways to do this. There's simple ways to do this. There's more complicated ways to do this. But from estate planning, there's a lot of things that you've heard out there before. So if you talk to an attorney, they'll talk to you about trust planning with actual physical documents and legal documents. Charitable remainder trust, charitable lead trust, you've heard of probably. CRUTs and CRATs, that actually stands for charitable remainder unit trusts. There's charitable gift annuities. There's pooled income funds. There's a lot of planning tools out there. So again, we're very familiar with these. So if you have desires on giving, you have desires on, giving money to your church or charities or people you feel really strongly about, let us know your desires on that because we do have experience in this area and we can lead you down the right path. and give you some ideas to think about. So our very popular one is called donor advised funds that you've heard about that one probably. They're starting to be advertised on TV. I've seen a couple advertisements for them. They actually came out in the 1930s, believe it or not. So they've been around for a long time, but they haven't been as apparent and since then. But since the late 90s, they've become very popular. Basically what it is you donate some of your money to an account that you control 100%. I mean, we invest it very similarly how we do your retirement core funds with us that you have with us. It's very, very similar process there. But you're basically in control of who you give the money to, how you give the money, and when you give it. So you can give to multiple charities. It's not just one or two. You can give, if you have 10, you can give the 10 out of this bucket of money that you create for yourself as well. You also get a tax deduction for doing this. This is one of the main reasons why you do it, because of the new tax laws. So there's a lot of things we could do. Publicly traded companies, mutual funds, bonds, appreciated stock. We can avoid capital gains on appreciated stock. That's why we do that. You also can name your IRA, your beneficiary on one of your IRAs as the church or a charity that you feel strongly about. So a lot of times what we do is if you want to do 50,000 or whatever number you feel comfortable that you want to give to the church or charity, we actually create another IRA that's just separate for that type of purpose. So again, if you have desires about this, let us know. We will help you. We'll guide you. We're very familiar with this process. This is the stuff that I love doing and we all love doing as well. So lastly, I'll hand it back over to Chris, is scenario planning. I've heard a couple of these. I'm thinking about changing my job or position, looking for a different opportunity. What would our scenario like? What would it look like if we did that? What if we had to stop contributing for a little while? What if we could amp up our savings? You know, what does that look like for us? What's the outcome? So again, would we be able to afford to retire earlier if we could ramp up? Or do we have to work a little longer because we can't save as much? Let us know those scenarios that are floating around in your head. We can solve them for you. We can calculate that. Benefit packages analysis. If you're switching companies, things we've done in the past, 401k matches. What is your 401k plan? What is it? What was it? What does it look like now? Profit sharing, stock awards, insurance programs, equity stakes in companies, all things we've done, deferred comp analysis. Let us know. What if we wanted to buy an RV? How would that affect our overall plan? What if we started gifting to our children or grandchildren? How would that affect us? These are some questions that we hear. What if we want to buy a new car every 7 years? Will that work with our plan? These are all things we can help you out with. We're very familiar with them. So I just want to let you know that these are things that I'm hearing from you, and we're here to help you. Chris.
Thanks, Ken. So a couple of things I want to mention here as well is, and this is a very important piece too, the question that we're going to ask to you, and we want to ask to you because nothing is more important than this. From here on out, what's most important to you? I don't care if you're about to retire, you're pre-retire, you're 85 years old. I want to ask you that question because that's what we want to provide to you. So when you're looking at some of the things we provide that may not be even financial, we are looking at a whole life. We're looking at what I call true wealth. And we want to make sure we're helping you to manage your true wealth. And that's not just money, but who you are. Some of you only would like the money and the financial resources, but the preponderance of you have been responding to actually us looking at some of the ways to make sure you're not just living your life, but optimizing many different areas of your life as well. So we'll continue to provide those. But I think what we're finding right now in a great book from Ken Dykewald is what people want right now is, and this is a very important piece, what they want is health for life, freedom to be one's authentic self, and a chance to pursue one's purpose and personal version of happiness. That's really what people are looking for. Now, that's a great statement, but I want to know what that means to you. I want to go further. Give us some ideas of what that means, and can we connect you with a resource that will help you do that? That's a very important piece. So the big question, a big statement we want to say is, we don't want to add years to your life. We want to add life to your years. That's what we're looking to do here and help you with here at Gentain, and the finance can help support those pieces as well. A couple of things as well I want to take a look at. Many of you, and my mom got this, so I want to make sure you stay this well. Our account is switching from passport to ambassador. There's a big name on this. So basically what's happening, and there's something called, I won't go into all the details, but regulation best interest is occurring, and it's occurred July 1st. We've been fiduciaries and doing what's in your best interest for the last 25 years. We've been operating on a fiduciary standard, I should say. What's interesting about this is now they're beginning to regulate that others have to do it as well, and they're kicking and screaming. But as such, they're going to force some different ideas out there and add some different costs to the industry, which is fine. It is what it is if it protects you. But as you get this paperwork, there's a best interest book you got. Also, Ambassador is the new account. Yours will be converted to that in about a month or so. And Ambassador essentially says all trades are, there's no fees whatsoever. So that was very close to how Passport was before, but it's a new system with which trading is no cost to you. There'll be an extra expense to it, but that'll be picked up by the firm, not by you. So when you get this information, it's going to look like a whole bunch of information. You can read it if you like, go through it, peruse it, but it's really saying, as you look as a client, nothing will change on cost, expenses, none of that. Actually, it'll go down a bit by the expenses that have been charged in the old account as well. I just wanted to make sure we brought that up. That should have been in housekeeping as well, but it's something that's important. You may get, if you get a question about it, feel free to let us know, but I know a lot of you had received that piece recently as well. Last piece I want to talk about too is behavior. So a lot of people make this assumption. So right now, we're in the midst of a mania. The mania is around big tech stocks. Apple, I can name the 9, you'd know them. They probably something, Flicks, something, you know the names of them, right? But during this correction, a lot of people have hopped online and bought some of them. And they are starting to confuse the fact that those have gone up with a great plan. There's very little correlation to the stock going up and the investment return and a great plan. Because oftentimes you'll also see those ones that are flying being the ones that correct most when the market corrects as well, when people are just blindly putting money into them. So you got to be careful with that. I want to make sure people during this time tend to have a massive behavioral failure, which we talk about. They believe that when the price is going up, so is the value. And when prices are going down, the value is decreasing. It's absolutely incorrect. The value of a stock is very consistent. Price doesn't indicate when it's going up that it's more valuable. Matter of fact, when price triples, do you think that you're paying a whole lot more for the value of that company? Oh, wow. Value may absolutely be inverse to price in many cases. So there's a big equation here that people kind of are missing right now. And I want to make sure, because a lot of people, hey, I bought Amazon, I bought this, I did that, or we got this piece. Just be careful. Don't get too fed up into this. I've seen this happen twice before, mainly in the 2000s and a little bit in 08. But be careful when one dimension is really pushing a portfolio. Value has been off the scale for 15 years or 12 years, I should say. It's going to come back in favor at some point in time. We just don't know when. That's why we continue to hold both. So those are a couple of very important pieces. I know we're just a couple minutes over, but I'm not really too concerned right now because we're recording it and you can turn us off when you like. But there was a gentleman named Mr. Druckenmiller. So he's basically a billionaire. He was George Soros' partner. Very interestingly, on about May 12th, he said, I've never seen the stock market to be so overvalued and devaluation is inevitable. So he sold his positions. And very interestingly, if you take a look at this, to his credit, Mr. Druckenmiller didn't just say it. He actually put it in his portfolio and did sell. And his portfolio return since that date has been 3%, whereupon the equity market surged 40%. So you're going to see those people like this out there making those statements. Oh my gosh, oh my gosh. He actually come back and says, whereupon he pronounced himself humbled. So this is a person who everybody trusts. Oh, he's a billionaire. He's got to know what's going on. Just because he or she has money doesn't mean that they know what's going to happen. So I thought that was a pretty interesting piece. The second thing, you're going to see a mid-year letter from us coming out. I just wanted to touch on a couple things. You guys know the principles of who we are and what we do. So, and I'll just read it to you because I think it's a good point. So for those of you who are going to get it in the mail later and who are on the call now, you'll hear about it now. I believe that all lastingly successful investing is essentially goal-focused and planning-driven. All failed investing is market-focused and event-driven. Principle number 2, stated another way. Eventually, or every truly successful investor I've ever known was acting continuously on a long-term plan. Every failed investor I've ever known continually reacted to sudden and terrifying market shocks. Okay? Thus, we have found that long-term investing success is only incidentally a function of the economy and the markets. It is a direct function, Thus, I've found that long-term investing success is only incidentally a function of the economy and the markets. It's a direct function of how the investor reacts, or more properly, how he or she refuses to react to what's going on now. So we know this. You and I, we're long-term, financially goal-focused investors, really acting on a plan with patience and discipline. The much smaller part of what we do really is crafting the plan. The much larger part of what it is we do, and this is extremely important, is helping you not react in stressful times like this. That's the value of what we do for you. Don't get me wrong, of course, we do a bunch of other stuff, but if we're looking at the true value, it's that and tax minimization. Those two are huge parts of your plan. Behavior and tax minimization are some of the most important pieces that we take a look at. So we continue to believe that equity markets cannot be consistently timed or forecasted, much less there's no really way to capture equities under superior long-term terms, or to capture equities superior long-term returns other than to sit through these times and be in them. I've just shown you that with the timing slide that we showed you. Very, very important to know. I wanted to go through some of those. You'll see a few more parts and pieces from us. I don't need to recount what's just happened. I think Ken and Zach did a great job of that piece as well. But I just want to make sure that you know our purpose is to be here to help you optimize your life and to help get you through times when you really need us. So as Ken's mentioning, it's refinancing a house, it's birth of a child. There's so many different life events we can talk about. We're here to be with you during those and create community around other great people who can share their experiences so we can actually together make better and better, stronger decisions. The thing I keep getting on my phone calls with clients, my webcasts or my Zoom calls, is confirmation that what we've done in the past is helping people get through this. That is so gratifying for us to say we're having some effect on your ability to become great investors, more importantly, great planners, and living a great financial life. So we really appreciate that. Thank you for sharing that with us, and thank you for being candid with us on those as well. We really appreciate that piece as well. What I'll close with here is as we look at this, you know us, we are very serious about our guidance. We take a very, very strong commitment to you and your success. You know, wealth management is what we do. I know that's how many of you have met us, but really guiding you through times like this is who we are. So what I want to do from our entire team here, and everybody's back in the office, which is great, save for one for right now, but it's great to have all of us back here really serving you on a team basis, which is outstanding. And thank you for working with us as a team as well. We've got specialists. Everybody has a phenomenal role here, and it's extremely important to delivery of what we do and how it's delivered. But I want to thank you on behalf of the team here at Gentain. And until 2 weeks from now, not next week, until 2 weeks from now, stay safe, stay positive, and be grateful. Thank you.